Martin from Secrets, the channel for learning about trading and investing. Welcome to the daily pre-market analysis where we look at what happened during the day and how we can plan for the next trading day. And this is analysis for September 8th, Thursday, 2022, tomorrow. So we had a down day today, right? Nifty closed flat, right? It was not really down. Banknifty was down. So Nifty is consolidating. Banknifty also seems to be consolidating now. And we can't consolidate for a longer period of time, right? The index has to explode either way. So that's where we are. Let's understand more which side it may be biased towards that explosion, right? Tomorrow is an expiry as well. So this is the chart that you're seeing. This is the daily charts for the Nifty that you see here. This is clearly taking the support of moving average, and it has gapped down and then managed to close above the brace candle low. Nifty gap down clearly visible, small body candle, clear gap down can be seen here, and that's it, right? So the expansion has contracted and the Bollinger Bands. While Nifty, the contraction is steady, right? So you can see that the 5 days of candle is inside this big Tuesday's bullish candle. So it's consolidating, probably forming a triangle, and it has to explode either upside or downside, right? It could happen tomorrow or very, very soon. That's all can be said right now. But everything looks fine, except that if you look at the weekly candles, weeks has not ended yet. But look at this. If you look at the weekly candle, this is what you see, right? It's still inside that. The week has 2 more days, but still inside that trend line. The Nifty, Banknifty also, we are still inside the trend line, right? So that's the thing. Let's get the numbers and see. Look at the flat day, 0.18%. That's 31 points only lost after all the drama intraday. Banknifty down, we lost 0.5%, 210 points, and both of them gap down. And Nifty already is consolidating very much. 5th day of inside bar, we have seen that. Banknifty lost its momentum and has closed, gap down and closed below the previous low. So intraday it was a V-shaped move both, right? Gap down and then recovered. But Banknifty, the recovery was not very much good enough. So it lost more, right? Weekly trend line we have seen. So like make note of these levels. Tomorrow is an expiry. The levels are very important, crucial. So 17,778 seems to, that's the zone where the resistance is there. 17,800 could be a tough thing to close tomorrow unless a breakout happens. Similarly, 17,992 the resistance about that. Similarly, Banknifty 14,074 to 40,160. That 40,000 to 40,200, that range, that zone is very important. That's a major resistance zone. And after that, 40,500. So that's resistance on the upside. Downside, 17,400 seems to be very good support. So 17,450 zone has got a previous swing low. 17,380 has got a support, gap support.
It's 7:30.
Similarly, 39,000 and 39,000 will be very good support. 38,400 after that if it breaks down. So that's the supports on the downside. Already we have seen that the only difference is Banknifty sideways movement is reconfirmed. It was showing some upward bias, although the bands had expanded, but had contracted. I mean, momentum is continued to be sideways on the Nifty. It has not managed to climb above the bullish zones as far as say above 60. But Banknifty maintained that for somehow bullish zones, but flat, weak strength. Trend, weak strength, very weak strength, but it's still in the DMI positive as per the ADX indicator. So it's bullish, maintaining the bullish, but a weak strength. It's cold up a little more to 20, but very close to 20. Be careful. It did not spike up much today. But it spike up in the sense it did not go beyond the 20 plus. Futures Y showing short build up and long unwinding. Both are bearish on indices, so something to be concerned. So VIX is usually high. Why is showing a very wide range? Because panic is there. Writers are seeing a very wide range of 20,000, 18,000, 39,000 and 40,000 just one day before the expiry. Means there is worry. There is the volatility is there. VIX is there. So PCR is good enough, 0.91 and 0.77. Banknifty is weaker today, yesterday it was the other way. So put call ratio is not bad. But overall OI is not giving any clues, right? Futures OI is showing the clues that it's bearish, but options OI is not giving any clues. A very wide range. But the levels, if you match up the 17,000, it's quite far. So, right, 70,400 and 800 is what I'm looking at based on the support resistance. But yeah, so but these levels has to be kept in mind. Sectoral watch auto underperformed today. Auto was most performing stocks, so it underperformed. What other sectors managed to close less than 1%? Green, all close green, all sector close green. That's a good thing today because of Fyers are in action. Yesterday also, market was slightly flat, but still, the Fyers had been buying. So it is that buying that small buying that helped the market to go down big. Sectoral, if you see FMCG, auto, metal, realty, all of them are making the bullish on the short term daily time frames. FMCG, auto continue to be bullish, most bullish. Heavyweights, TCS was already stopped what was performing. Right? It's in the recovery mode after having got beaten down. 0.7% of movement has happened today. TCS, HDFC, ICICI both gave up today 0.8%, 80%, so 0.80%. So all the others heavyweights were flat. So ICICI is still the most bullish on the momentum by ICBC from the RSI point of view. Nifty is still in the BR zones on the momentum. That's about heavyweights, right? Nothing much happened today except that IT showed some move. So it is IT stock that is moving up. Buying was happening there. And bank was not doing good. So one of the bank stocks, which is major part of the heavyweights, 3-4 banking stocks did not perform as such. Good thing is Sapphire so back into buying. Yesterday also they were buying. So 2 days continuous buying, that's good. Crude oil, so DI is solid. So institutional buying is, their concern is taken away for now. Crude oil is falling, that is another good thing, positive. Less than 84 is falling, crashing towards the, so it's in the bearish momentum if you look at the charts. And the concern here is the dollar index. So dollar has been rising, 110.4, that's 20-year high, all-time high. USD also is close by 80 levels and the rupees at the weakest level. So gold is flat as support zones. SGX flat and US indices. Just had to check. Yeah, it's also green today, but flat and so US indices are bearish. Move the other day also, yesterday also they were bearish. So big bearish movements are happening in the US market is the concern. It's falling down the trend line. So there is big moves that is happening. You have to be cautious. Look at what happened yesterday. It's further went down. So it's small move, we didn't react. So big moves like this, we obviously could react. Probability of reacting wildly now markets also. So you have to, is a possibility. So you have to keep watching that. So tomorrow's weekly expiry volatility. That's a major event. All that we can be expected. Multiple fashion and DLF both are longs. Just quickly see the charts. It's already come in the weekly stock market stock picks. I refer to the playlist for the weekly stock picks. You can see the detailed analysis. So this is very good breakout of a rounding up and handle. It's broken out clearly. And it's an all-time high level. Be cautious. The price moves above. Every chance of breaking out. Momentum and trend both are bullish. DLF reality sector is doing good. Even textile is also going good. As the fashion textile sector price it is doing good. DLF you have to be little cautious, careful because it's a multi-year. I think 10 or 13, 2010, 12-year, 11-year kind of breakout is what is happening. So it may not be that easy, but if it happens, it will be a very big move. So be very cautiously bullish on this. But the moment when the trend has gone into the bullish zones, with a tight down stop loss, you can look for trading opportunities in the DLF. That is something that's for tomorrow. Just to wrap up the market view, today what we are seeing is that 5 days we are consolidating in the index Nifty after a big move that happened on the Tuesday. So that's one thing that we give. So consolidation is evident now from the Bollinger Bands on both the indices. That's for true. 5 days consolidation has to explode somewhere. It can be either up or down. The problem is that week is ending early after tomorrow, and the weekly trend line, it's not actually broken down. It's still on the edge, so anything can happen. VIX is not cooling off. It's very close to 20 and highly volatile. You can see that. So these are all the negatives that have to be concerned, for the bulls for sure. But what is only if you look at today's chart, change of polarity bounce up can happen. Consolidation explosion can be upside. You can hope for that. Momentum divergence is there in the Nifty, which is bullish positive reverse divergence actually. So it can if it works out, it's confirmed. If it works out, it can go up. Uptrend is closer to bullishness, not very bearish. That's one thing. But volatility can be expected. Look at the range of 1,000 point for Nifty 1 day before the expiry. So volatility obviously will be there. Gamma moves can come in to expiry, that is for sure. Only consider the US markets and the VIX. It's the same thing that I was saying yesterday also. Yesterday also it was a mild bearish view. Today also mild bearishness is what my view is there, looking at the chart and analyzing all that. So there is a mixture of both bullishness from the CIP and the divergence and the open interest. But there is also a concern of the trend line, edge, VIX, high, consolidation breakout. All this uncertainty is still there. So cannot give a clear reaction, but I am taking for a mild bearish view as of now. Let us look at the pre-markets tomorrow and then come to conclusion. No point in taking a view today. We can always change that tomorrow when you see big moves or overnight things are happening, right? It's no problem. But overall, 17,400 to 17,800 and 39 to 40,000 is what the range that is looked at Nifty and the Banknifty that we have to look from the expiry. That's my view. Hope this helps you some way. If that helps you some way in your market analysis and the trade for the next day, consider hitting the like button and share to maximum. Subscribe if you're not subscribed and share to maximum. Happy trading, happy learning, happy investing. Bye.